This book right here, Becoming Your Own Banker by Nash, absolutely changed my life forever. And it's going to change yours too. I'm going to give you the top 20 quotes from this book so that you can understand how this can apply into your life so you can change your family's future forever as well. The most important part is literally the first paragraph, and Nelson wrote this book almost in parables because he knew it was going to be complex to understand. But the first sentence says, Becoming Your Own Banker, the infinite banking concept is a text for a 10-hour course of instruction about the power of dividend-paying whole life insurance. It is not a sales tool for life insurance agents. And the reason that that's so important is because so many people think you can sell this thing in 15 minutes or teach this or are supposed to understand it in an hour Zoom call that we might have together. This is for a 10-hour course. And so it's important to know that you got to put some time into understanding this thing. And if you're not willing to put 5 or 10 hours into understanding a new concept financially to change your life forever, then this video you should just stop watching right now, because you got to dedicate some time to understanding your stuff. Even just these 3 books, these are 500, 600 page books. You spend a lot of time devoted to understanding this. This book I sat and read The Creature from Jekyll Island for 12 hours straight, and it's worth it. This book only takes 2 hours to read, but it might take a couple times to understand it. So that's the first aspect, is that it takes a little bit of time and it is not a sales tool for life insurance agents. The whole idea is to recapture the interest that one is paying to banks and finance companies for the major items that we need during a lifetime, such as automobiles, major appliances, education, homes, investment opportunities, business equipment, etc. This quote is so important because it talks about the whole idea. And it's about recapturing the interest. And if you say that you're paying cash and you don't pay interest, you're missing out on the opportunity of earning that interest. And so you want to understand how this is going to help you finance the major items that you need during a lifetime. This book is not about investments of any kind. It is about how one finances the things of life, which can certainly include investments. It is not about rates of return. So many people talk about rates of return and they ask about rates of return. This is not about rates of return. You don't ask Bank of America when you open a checking account, what's the rate of return? That's where you store your wealth. Life insurance is the same way. This is about a warehouse or a storing of your wealth. The infinite banking concept is a major paradigm shift for most folks. It will require several thorough readings for a full understanding of the message. The concept is not complicated, it is just a different way that the majority thinks and behaves. In fact, it is the ultimate in simplicity. This is so important. It is going to take, no matter how smart you are, it's going to take several readings to go through it thoroughly and actually understand it. And I had to read this multiple times. And so you got to read it multiple times. If you knew that this little book, and you had to read it a couple times, but it would change your life, how many times would you read it? The problem in America isn't so much what people don't know. The problem is what people think they know that just ain't so. This is a quote from Will Rogers at the bottom of the book, and it's so true. It is not about what we don't know. Most people think that they know things. They have the arrival syndrome, and the reality is that what they think is true is just simply not true. The average person is not able to discern what is truth and what is not truth, and this is a major hindrance to understanding the infinite banking concept. The objective of a business is to provide you with income and to build a business that you will eventually sell to someone else to provide you with retirement income. Once you get all set up in operation, the difference between the back door and the front door is very good living if you can turn the inventory enough times per year. Growing up in the restaurant industry, I always took food out the back door. What do I mean by that? When you ever have gone to a friend's restaurant or a family friend's restaurant and they brought you free food? Well, growing up in the restaurant business, we always had free food, and technically we're stealing from our own family restaurant. It's important to learn how to take that business out the front door so you can be a good steward of your money and build a profitable business. The very first principle that must be understood is that you finance everything that you buy. You either pay interest to someone else or you give up interest that you could have earned otherwise. The alternate use of money must always be reckoned with. Some call this opportunity cost. Opportunity cost is the cost of not doing something else with your money. And when you're financing everything that you buy, your home is financed with a mortgage. Your cars are financed through the financing company. Your living expenses are financed on credit cards. You're financing everything that you buy. And if you pay cash, you're giving up interest that you could have actually put into your pocket. Practically no one is aware that when you make a deposit of $1,000 at your favorite bank, they can now lend out $10,000 as a result of your deposit. This is called fractional reserve banking. And with 1933 with FDR and 1971 with Nixon, we got off the gold standard. And that means that the Federal Reserve can just print money whenever they want, and the banks can lend it out as much as they want. I am not describing one life insurance policy. This is to be a system of policies. Have you noticed that when a grocery store becomes successful in one location, they tend to establish another store in another location? So many people think that you have to have only one big life insurance policy. At this point right now, I have 6, and I'm going to keep having more. Some of my mentors have 60, 70 policies because you get policies every time you expand your system, just like a business would grow more and more franchises. The real solution is to quit the government spending for all the programs and get out of the lives of the citizens. This is a concept of not living on welfare, not relying on the government, and taking control of your money. This is Austrian economics at its finest. As practitioners of teaching clients to develop their own banking systems, this is probably our hardest job, to get people to open up their minds. Every single day, what we do is about opening up your mind. You must be open-minded. You must be able to rethink your thinking. You must be willing to understand that everything that you've learned might not be true. Wait. Be sure to like, subscribe, and turn your notifications on so that we can deliver value to you every single day. The objective should be to simply get as much money as possible into the policy with the least amount of insurance instead of trying to put as little money in and get the greatest amount of insurance. This is what the people that say buy term and invest the difference say, is to get the most amount of insurance for the least amount and then invest the difference. That's not the way that it's supposed to be designed. That's not how you create a banking system. That's how you continue being a slave to the system and stay in the Wall Street, banks, and government loophole. There are only 2 hard, fast rules in building and carrying out this concept. 1, don't be afraid to capitalize the system. And 2, don't make policy loans without making provisions for paying them back. I see so many people and hear so many people talk about never paying your loans back. You just have to have provisions for it. You need to make an idea around it, a plan around it, and don't be afraid to capitalize. If you were going to start a business, would you rather start off with more or less money? You should start off with more. So you should put as much money as possible into your banking system because that's your banking system. It always sounds a bit strange to people when I say premiums and incomes should match. Let's start with a very basic fact. Doesn't all your money go through someone else's bank now? We're using our life insurance policy and expanding our system to accommodate all of our income. This is going to be a totally different way to think because now you have to think of your life insurance policy as your banking system and flow all of your income through your policy. Not necessarily your base premium and income should match, but your total premiums and income should match, including paid up additions. It is vital that you understand that you must set up a loan repayment plan that equals or exceeds what you would have to pay the finance company that you were using in the past. This is a key idea that when you borrow from the life insurance policy, even though they might charge you only 4 or 5%, if you were going to go get a car at 8 or 9%, you should make a loan repayment plan to pay back your life insurance company 8 or 9% because the additional difference is going to go in as paid up additions into your policy, and it's going to increase your premiums, which increases your death benefit, which increases your cash value, which compounds more and more dividends and interest. The company, a corporation, should not own the policy. You can improve the wealth building effects of the whole scenario by owning the policy himself, purchasing the trucks himself, and leasing the trucks to the corporation, making sure that he's charged a lease payment that's as high as possible. By doing it this way, you can have an interest deduction for the policy loans used to purchase the equipment, since the loans are for business purpose, and then depreciate the trucks over a reasonable time. And you can have a captive customer, which is you, that's leasing these trucks from you. So you now control the whole financing mechanism of your life. This is why you should own the policy individually and not through your corporation. Actually, this interest is not really interest. It's additional premium or capital that's being paid into the policy that equals the interest that was being paid to the finance company. There really is no interest being paid. They do use that terminology, but the only thing going into a life insurance company or policy is actually premium. It's just different types of premium. And so you're still paying premium back into your policy. And when you pay the premium to the policy, you're actually increasing the death benefit. And when you increase the death benefit, you increase the cash value. Increase the cash value, you increase the dividends. When you increase the dividends, you increase the death benefit. And you continue snowballing this growth of your policy over time. That's why it's so sexy. When people complain about dividends or interest rates being up or down, Nelson says, I'm afraid that those folks have missed the main point of creating your own banking system. A system consists of many policies, and the number of years that each policy is capitalized must increase when interest rates go down if you are going to expect similar results as those depicted. The reason he explains this is because the book was written in 2005, and interest rates vary up and down since then. It's not always exactly what's in the book. So you got to check out what it is, but even if you're worried about the interest or the rates of return, you got to go back to the first page, because it's not about rates of return. It's about how you finance the things of your life. And interest rates go up and down over time. So you just got to be able to understand the macro level concept of how this actually works to implement it in your life. This is an exercise in imagination, reason, logic, and prophecy. None of the figures you're going to see are set in concrete. Nelson was huge on understanding about imagination. When you own your own banking system, you're free to do whatever you want with it. It is your banking system. There is no reason why you have to live in the limitations or the confines of what even Nelson or your practitioner has told you. You own the banking system. You can do what you want, when you want, and how you want. Above all, you must be patient. It is going to take years to get started, and it needs to be a lifelong commitment. Infinite banking is not some cool concept. It's not a get-rich-quick scheme. It's a totally different way to operate your finances forever. And once you start, you can never stop. So many people will relapse into old ways of thinking. That's why you got to arrange wealth clubs and arrange good people and be part of masterminds like the ones that we run, where people can collaborate together so you always remain around this book. Nelson always says, if you know what is happening, you'll know what to do. This is all about how to rethink your thinking. And if you know what's going on in the world, he means, then you'll know what to do. He means if you understand the banking system, if you understand the government, if you understand Wall Street, you'll get out. Thank you so much for hanging out and watching my video for Becoming Your Own Banker by Nelson Nash. Be sure to grab a copy at infinitebanking.org, and be sure to like, subscribe, and turn your notifications on so I can keep delivering value to you every single day.